Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and then we're going to do a deep dive into DSCR loans, which is our favorite loan type. Now we'll wait just a minute here to get started. Let us go live on all the different platforms. We did put the chat up on the screen, so feel free to drop a comment there in the chat. We appreciate all the comments coming in. Thank you everybody already. Corey, Gerardo, Melvin, Chris, appreciate those comments. We'll get started here in just a moment. Today's topic is literally our favorite type of loan and most popular loan here because we do specialize in non-QM loans and work with a lot of investors. So always great to go through this topic. And it looks like we're live on all the different platforms, so we'll get started. Keep dropping comments there in the chat. Drop any questions you have in the chat as well as we go through the deep dive, but we'll go ahead and take the chat off the screen for now and we'll get it started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, and I'm joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We're a correspondent lender that specializes in non-QM loans, and what we do every morning on this show is go through some live mortgage rates, and then we do a deep dive into a different loan topic. Today's topic is going to be DSCR loans, which, as I mentioned, is our favorite loan type here at the Mortgage Calculator. It is definitely what we specialize in. So our sales manager, Jose, with 28 years of experience as a loan officer and a realtor and a ton of experience with DSCR loans, is going to do a deep dive into that topic here later. But before we do that, we'll do what we do every morning, which is go ahead and pull up the live rates and see what the rates are looking like for a few different programs. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the market is doing this morning.
All right, let me switch my screen and we will get started. So as Kyle mentioned, this is our pricing tool for our team of mortgage professionals. It will show us the general rates and APR for today. It is December 20th, just after 11 a.m. Eastern, so all of our standard programs are live here. So we will go through a basic scenario, compare across the programs. If you'd like a full loan estimate with all of the itemized fees broken down, please get with one of our team members. We have over 400 licensed loan officers in 24 states. So for the demo, we'll set up a basic scenario for all the comparisons here. 400,000 loan amount, set the LTV to 80% loan, 20% down payment. And we're going to ask the computer to find the absolute lowest rates we can offer for conforming conventional. And then we'll go into FHA, and then we'll check out our expanded guidelines, also known as non-QM. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. We can quote it, no problem. And USDA is only for eligible properties. If you do happen to be looking in one of those areas, just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40%. So with these settings, as we do every morning, let's check out the rate options. All right, had a little bit of downward movement. So best option today, 6% rate, 2.5 discount points in cost. Final APR, 6.287, just a little bit lower than yesterday. So that's why we love doing the show here, seeing some good options pop up as the day goes on. Now, if our customer doesn't qualify for a conforming conventional program here for any reason, typically the next option we want to propose to the customer is going to be an FHA option. So we'll set up the same exact scenario here, and this time we'll select FHA. FHA does allow more leniency on credit issues, as well as a much higher debt-to-income ratio. But for the demo, we'll keep everything exactly the same so we can compare apples to apples here. So let's see the FHA options this morning. And it looks like they went down just a touch as well. 5.375 rate, 2.375 discount points and cost. Puts the final APR at 6.299. Right there with conventional, almost identical. But for our customers that qualify for both, definitely check out both options and compare them. This APR does include the upfront and yearly mortgage insurance for FHA, which has come down a little bit this year. So definitely great for the customers that need to use the FHA. Now, where we love to specialize here at the Mortgage Calculator is if our customer doesn't qualify for either program. Unfortunately, many other banks or lenders would have to deny that customer, but that's where we love to present our non-QM, also known as expanded guideline options, where we have over 5,000 alternatives using different income options. So when we select non-QM expanded guidelines, Now we have a new option pop up for income verification. So full doc is what we use for conventional and FHA. So if our customer doesn't qualify using full doc 2 years of tax returns, typically we'll choose a non-QM program to take advantage of one of these alternatives. We have asset-related programs, business bank statement programs. The investment programs are just for investment properties. We'll talk about that in a minute. We have the personal bank statement 12-month. It's the most popular by far. That's what we use for the demo. And we'll have RSU stated, VOE, 1099, P&L, no income, CDFI, all kinds of different options. For the demo, we always use the 12-month personal bank statement, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit their tax returns, may have various write-offs and may have trouble qualifying or just need a little bit of extra income. We can solve that problem. No tax returns involved, just their last 12 bank statements to determine a debt-to-income ratio using no tax returns, just the cash in the bank. And therefore, our customers usually qualify for double or triple the income. And in the example here, we use 40% DTI calculated with the cash in the bank. So let's check out the bank statement options this morning. And again, not much changes with non-QM. It stays pretty steady. So this is about the same as it was yesterday and all week. 7.375 rate, 2.125 discount points in cost, puts the final APR 7.767. So obviously, non-QM bank statement options a little bit higher than conventional. We were beating conventional for a bit there when rates were crazy, but this is more standard. It's a little more than 1 point difference for our customers who have trouble qualifying for conventional to go to a bank statement option. And if we scroll down here, there's a ton of different variations, hundreds of different combinations here. Please get with our team. Some of these at higher rates and costs may allow credit events, foreclosures, bankruptcies, late mortgage payments, things like that. Some of these may use different ways to calculate the bank statement income. So please get with our team. They'll find which one of these hundreds of variations will work best. And before we get into Jose's deep dive, we still want to do some live pricing for investments. So Jose is going to go into some details there. But we want to do some live pricing demos as well. So we'll set the LTV to the same, 80% loan, 20% down payment. And we'll have the computer find the best rates we can offer for conforming conventional and expanded guidelines, also known as non-QM. Remember, government programs like FHA, VA, and USDA do not work for investments. So we'll start with conforming conventional. Everything's going to stay the same as all the demos. Only thing we've edited here is the occupancy. So we can check out the conventional investment property rates today. All right, good option here at the top, 6.624 rate, 3.5 discount points in cost, puts the final APR at 7.031. So good option here for our customers that qualify, full doc, tax returns, all that great stuff. Before the last few months, these have been really unrealistic. Now these conventional options for investment properties are realistic. However, I recommend all of our customers out there and all of our MLOs also make sure to compare a non-QM example. So for the final demo, we'll compare an investment, 80 LTV, and this time we'll select expanded guidelines, also known as non-QM. So we have to set a couple new options here. First off is the income. The most popular income type for investments is going to be the DSCR, and that's because it doesn't require any income or employment or documentation on that from our borrower. We simply use the appraisal estimated rental income to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1 or higher. We also have options for ratios under 1 where the property may not quite cash flow. For the demo, we'll put 1.5 so that all the programs pop up here. And finally, prepayment penalty must be selected. That's standard for an investment property non-QM. So 3 years is what we use for the demo. We can select 0. That will limit what shows up and cost more. We could also select 5 years. That will, again, limit what shows up, but does save our customers some money. 3 years is standard. So we select that so we can see the most applicable options pop up here. So DSCR rates still absolutely smoking. 7% rate, 3.375 discount points in cost. Final APR 7.513. Remember, the conventional options were just a touch over 7, so within a half a point with DSCR. I'd say 99% of investors, when DSCR is within a half a point in conventional, will choose a DSCR option. So definitely recommend all our investors out there, check out the DSCR options we have and compare it. You can do 1, 2, 5, 10 loans at a time. cash out multiple properties, purchase multiple properties, tons of flexibility. And Jose is obviously going to go into a deep dive here in a second on all the flexibility that we have. If we scroll down here, you'll see all the different options. Some of these may allow bankruptcies, foreclosures, credit events, late mortgages, things like that. Some of these may allow short-term rental income, very popular request. Some of these may allow different property types, borrower types. Lots of flexibility here. And that leads into our topic for today, which is going to be Jose going into more details on our DSCR loans. So just like we did yesterday and the day before, we want to show some specific examples that we can't do on the live pricer. So Jose is going to go through some typical scenarios here for the DSCR. We can't do the live pricing on the special programs with the special LTVs and stuff. So Jose will highlight some outlier programs that we want to make sure our customers and our team know about here, such as the low down payment DSCR options and other tips and tricks. So Jose, if you're ready, I'm sure you got a few tricks up your sleeve. Let's go ahead and check it out.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, we're showcasing DSCR loans today because we have some amazing downward movement. So we always like to showcase all these great situations so that our investors out there do not miss any opportunities. We know they're watching. We know they love. We always get the calls after the show with questions and stuff like that. So definitely we love adding value to everybody. So debt service coverage ratio programs. Let me just go over some of the quick pointers here. This is an option for investment properties only. I will mention that to you all. Investment properties. So even if you have a 3-unit property where 2 of the units you consider are investment and 1 of the units is owner occupied, that is not going to qualify. We always get that situation where people say, well, I got a 3-unit, can I do DSCR on the other 2 units? Nope, that's not going to work because you cannot ever occupy the property that you are, that is a DSCR loan. That includes you can't have any relatives in there or anything of the matter in there. So I just wanted to get that across because sometimes that is a point, stumbling point on some of our deals. Debt service coverage ratio loans, great option, obviously for investors, great option for short-term rental properties as well. We have some high LTV options, like Nick mentioned. We can go all the way up to 85% LTV on these loans on a purchase for a 1-unit only. So I do have a lot of options to share with you this morning. So let's get right into it. Our first option, like we were talking about, is the unicorn, right? It's back. We've had it back for a couple of months now. The 15% down, only 15% down. That's 85% loan to value for our 1-unit property only. So 2 to 4 units are maxed at 80%. Let me make this a little bigger for you all a second. All right. So, like I wrote there in the comments, max 85% LTV for 1 unit, 2 to 4 units are maxed at 80% LTV. So our 85% LTV option, lowest cost option is 11%, costing you 1 point. And you can buy that down to 9.875 at a cost of 3.25 points for your 85%. Now, look at these numbers, right? This is to get an extra 5%. However, if we want to go the more traditional route, if there is such a thing for a DSCR loan, right? We're so getting used to this, right? That we call this traditional. 20% down, 1 to 4 units is the same, so 2 to 4 units are going to be priced the same as a 1 unit, no loan level price adjustments. And this is why I was saying you really have to show this to the borrowers so that they can compare. Now, if they absolutely do not have the extra 5%, or if they're trying to basically get 2 properties instead of 1, so that's the reason why they got to do the 85%. Totally understand that. They want to leverage themselves out and take advantage of the increasing property prices, because we know as the rates are dipping, there is going to be now more demand from those that were sitting on the sidelines waiting for the rates to go down a little bit. So prices will keep going up. So here we have 8.125% at par. That's amazing. And you can buy that down to 7.625. And again, like I state in all the shows, there are rates lower than 7.625. You would just have to make sure that you run your compliance test, paying special attention to the points and fees part of the test to see if you get bona fide discount points, for example, that would not be included in the test. If that's the case, there are certainly options lower than 7.625 that would be compliant. Or also, if the seller is paying some points, some seller credit, paying some of the borrower's closing costs, we can certainly put the loan discount fee to be paid by the seller, in which case it will not get counted into the test, or whatever portion of the loan discount is paid by the seller would not count into the test. So you could certainly get a lower rate than 7.625. This is just a conservative estimate without running any of the tests of what we can do. So there are lower rate options. So now we have with 25% down, right? So we lower the LTV, we lower the risk, and now all of a sudden we have 7.875 at par, 7.125 costing 3.375 points for a 75% LTV purchase. So here's where we get a little funky with the DSCR. These are some of my favorite options. This is one of the no ratio options, a phrase you're going to hear when the property cash flows less than 100% of the debt service. So housing expense here is going to exceed the rental income. Hence, our DSCR is less than 1.0, because that is how you calculate DSCR, the rental income, gross rental income divided by the housing expense. So in this scenario here, we are at a 0.75 to 0.99 DSCR. We can still do 25% down with this no ratio option of 0.75, and these are very good rates. 8.875 is at par, and you can buy that down to 7.75% for our less than 1 no ratio option of 0.75 to 0.99. And great news for all of you out there. I uncovered this nice little nugget here. Our DSCR less than 0.75. Now, this is technically a property that could be zero, even though zero would be pretty extreme, right? To get no rental income from property. Every appraisal for investment property is required to have a 1007 added to it, or 216 if it's a 2 to 4 unit, which is going to state some kind of rental income. So you're going to have some kind of DSCR. But for when it's less than 0.75, we can still do 25% down or 75% LTV for your absolutely no ratio DSCR, and 9.625 is our lowest cost option, 9.25 lowest rate option. Keep in mind, these two no ratio options, like I stated here, great option for short-term rental properties. What you're going to get in some of the trophy type short-term rental properties is you're going to get a great property, may not have short-term rental comps in the area, so you may not be able to do Air DNA, may not have short rental revenue comps because the seller hasn't been doing short-term rental. The appraiser says, I can't find any short-term rental comps for you. I'm sorry, but the the buyer/borrower knows what they're doing. You're already experienced operator. You know you're going to make bank on this property. So put 25% down, buy it with this option, or the 0.75 to 0.99 option if it fits that parameter. And you have your property. No ifs, ands, or buts. Nobody's going to question anything. No worries about not leased, or which you don't usually have to worry about on a purchase anyhow. But in this case, absolutely no worries. Just 25% down. Make sure the property condition passes, the appraisal value comes in, and you close. Obviously, as long as you meet the credit requirements. So this is a no-brainer. Why struggle? So now I'm throwing you here, going way to the bottom, right? This is absolutely the lowest credit score you can have and still do a DSCR loan. This is also our lowest credit score for alt doc options as well. Bank statement option, we can go down to 575 at a 65% LTV. In other words, 35% down payment. This would be applicable for a 1 to 4 unit. No loan level price adjustments here, nor LTV reductions. So obviously, rates a little higher, but not so high. It's 10.625, costing you 1 point. Now this is borrower paid pricing on here, so you would have to add the comp to the fees as is normal when we send these quotes out. It's already added. And now let's go with some cash out options. Let's put this one to the back. So our DSCR cash out for 1 to 4 units, 75% LTV. And look at those great rates, right? 8.125 is almost at par. And you can buy that down to 7.625%. Now, here's our other unicorn, right? We talked about the 85% LTV cash out. This is an the other 85% LTV purchase, This is an 80% LTV cash out. This is the other unicorn that we have, very limited in the market. This is another borrower paid pricing option. So here we're looking at 9.125 at par as far as loan discount. You are able to buy it down if you want to, but I'm giving you the no points buy down option. 9.125, not too shabby for 80% cash out DSCR. And then last but not least, our cash out low credit score, 575 is the credit score here. 65% LTV, again, max LTV. Same LTV for purchase as for cash out refis with this low credit score option. 10.875 is the rate for 1 to 4 units, with paying 1 point in loan discount. So very good options here. Most of you would think you'd have to go hard money, but no, this is a full 30-year fully amortizing loan.
All right. So you see now why that's our favorite loan to do, right? No income, no employment. Absolutely amazing. And like Nick says on the when he's showing the rates every day, of course, any investor is going to take this over a conventional investment loan for the most part, even if it's a higher price. So I don't see any questions. Let's go ahead and wrap it up. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Take care, everyone. Have a good day.
Thanks, everybody.